Well, you reached Manesh Patel from the EII Capital Group. In today's video presentation, we're going to show you how you can make 400 pips in 3 days. I know that sounds incredible, but we'll watch it happen. Here's our normal disclaimer. This is for education use only. We're not soliciting you to buy or sell any particular instrument. All charts you're going to see are from Thinkorswim, from TD Ameritrade, TradeStation, or FreeStockCharts.com from Warden Brothers. Okay. And before we begin, let me just show you my contact details here, mpatel@iicapital.com. You could access any of our resources from Facebook, the heat map scanners, Twitter, everything here at ichimokutrade.com. Okay, so let's begin and show you exactly how you can make those 400 pips. Now, I'm going to scroll up here. This is the email that we send out from our website, and I'm going to scroll back here, and you can see this is the email that we sent out to everyone that signed up for our heat map scanners for the currency. And this was sent out basically Sunday, January 8, 2012, and this is 2:43 p.m. Eastern Standard Time. This is basically before the currency markets even opened up. Okay. Now, when we send out these emails, these are 2 time frame opportunities per row for each time frame. Okay. The time frame we give you is called the trading time frame, and then we tell you the settlement over here. Okay. If you look at this, the way I like to do this is that each one of these rows represents 2 time frames. Remember, the more time frames you have in sync, the higher your probabilities go. Okay. However, as you get more higher probability trades, the less often they come. So when they do come, you want to hit them really hard. Okay, so what I like to do is I like to take this table and group it into 2 sections. The very first section that I like to group it is the 10 minutes, 30 minutes, and 60 minutes, and I'll say this is my short-term day trading module. Okay, the 120, 240, and daily is more of my long-term module. Okay, and so what I want to do is each one of these rows represents 2 time frames. But what I want to do is increase my probability, so maybe try to get to a 4 time frame opportunities. So what I like to do is look for a currency in the day trading module, okay, and then look for that same currency in the same column in the long term too. So if you look here, you have the pound Australian that was in the 30-minute, okay, which is the 30 minutes your trading time frame, and it's tied to a higher time frame. And then you also had the pound New Zealand, which was in a 60-minute. So both these were in the day trading module. And if you look down here, they're also in the long-term module because they're in the 120-minute time frame. So let's take a look at example of pound New Zealand. Pound New Zealand is in the 60-minute module, which is 2 time frame buy or sell right there. And then it's also in the 120, so that gives you another 2 time frame buy or sell. So the pound New Zealand is a 4 time frame buy or sell opportunity. In this case, since it's bearish, this is a 4 time frame sell opportunity, just like the pound Australian. Okay. For today, we're going to show you the pound New Zealand because that's pretty much the one that we entered. So if we go to our chart, and remember, we sent out this email Sunday, January 8th. Okay, so if you come here and you look at our bars, this is basically, we'll show you the beginning of the market for us in Eastern Standard Time, which is right here. This red bar right there represents basically when that email went out before the currency market opened up. So this was Friday closing prices right there for us, which is around 1500 hours Eastern Standard Time on a 2-hour time frame. Okay, now remember these are opportunities for you. That doesn't mean they're ready to go. For the bearish side, they have to sit there and break the last support minus a buffer to basically start a trend. So if for a bearish opportunity, you're going to sit there, and this was basically a signal here. You're going to find the last support, which is this pivot low, a couple points below that. That's our entry. Okay, so our entry is right there, and our stop is going to be this green line plus a couple of points there. And as this green line moves, our stop's going to move too. So initially, when we put an order out there, our risk looks huge, but that doesn't mean that's our risk on day 1 of entry at all. So our risk is going to be up here, so it looks pretty huge, okay, but it's not really huge because we have to evaluate the risk when we enter the trade. Okay, so we put the order out there, and luckily that same day at 3 a.m. while we were sleeping Eastern Standard Time, this order triggered, and you could see that it triggered here. Okay, and well, by the time we woke up in the morning, it was roughly here at 9 o'clock, our risk was right here. Okay, so our risk has reduced and the trend was already going in and moving forward. Okay, remember, our stop is basically as this green line moves down, our stop changes. And if you look, basically we had entered 3 a.m. Eastern Standard Time on Monday morning, which is kind of, some people look at Sunday night. And if you look, max profit was reached here at Wednesday right around 1700 hours Eastern Standard Time. Okay, we actually got stopped out here for a profit at this blue line here, which is at 1.9280. So if you look, we entered at 1.9681 and we exited at 1.9280. That's roughly a 400 pip profit that we had achieved. If you look at entry to max profit, that was about 480 pips or so. Sorry, 478 pips or so for max profit. But based on our system and strategies, we don't get out at max profit. We get close to it, which is right around here. This is a 400 pip run. Now, 400 pips for a 2-hour, that's pretty unusual. Reason why, statistically, a 2-hour will produce anywhere from 1 to 300 pips. Okay, so the extra 100 pips that we got and also getting at the max at 300 was great, but it doesn't always happen that way at all. On a 2-hour, you could typically expect anywhere from 100 to 300 pips. So, this was an extraordinary fluke event that happened due to volatility that occurred. But remember, you're going to have these home runs or extra bonus rounds, as I call them, every so often, depending on volatility in the market and so forth. But you don't ever want to expect it to always happen out there. So you always want to expect the minimum, which is 100 pips, and then everything else from that point on is bonus from that point moving forward. Okay. So again, if you have any questions, you could sit there and email me here at mpatel@eiicapital.com to access our heat map or this email module. You could go to ichimokutrade.com. There is a 30-day free trial out there too. Thank you.